yeah, type in any questions for Daniel, and then you will shortly meet the new board members. Some of them you already saw in our group photo session. And then Juha will present QT, and we will close at 2:15 with some closing remarks. Before I give the word to Daniel, I want to show the disclaimer. So one thing you already noticed, maybe we are recording this meeting, which will be a recording for internal users. And if there anything changes, Daniel will notice you. And here's also the disclaimer. You can take a look at it. It says this is no investment advice, and yeah, the future performance is the future. So there is no predictions we can make here. And yeah, without further ado, I want to give the word to Daniel and silence myself, and I'll be back in a few.
Great. Thanks, Tillman. Welcome, everyone. Good to see so many of you here, especially in these times. It's really good to see many people, even if like this. And I should probably say that in case there are some non-shareholders here, this is actually technically this is the informal part of our annual meeting. So the formal part of our annual meeting is done fully by postal voting due to the pandemic. So yeah, we'll start with we'll go straight to the presentation, and I thought it'd be interesting place to start with what I said 1 year ago to you all at this meeting. So I said that, COVID had just hit. None of us really knew much about it. We certainly didn't know what the next 12 months would look like, much less the next few months. And it was a very, very special and unsecure time at the time, I think, at least in my lifetime. But I still said that, imagine if the media would provide some perspective and say that on the one hand, markets are down 30% in the past month. And on the other hand, can we get the, yep. And on the other hand, we have these are the annual returns for the S&P 500 over the past 100 years. And as you can see, it's pretty green there. And I even gave the example of World War II, and it's you can see those years down in the left corner of the table. Yeah, we can take next. And I also showed you this to focus on the big picture. We've had a recent rough patch in the markets, but if you zoom out a little bit and look over the past 215 years, you see the red line there is really what has happened with stocks. And in that red line is all of the past crises you can remember. So they're the speed bumps you see there. So yeah, I also show you this quote, which I got from Jeff Bezos' annual letter last year, I remember. It said, when something bad happens, you have three choices. You can either let it define you, you can let it destroy you, or you can let it strengthen you. And I think it's pretty clear what we chose at River Oak, you as shareholders, and I and our board in our operations. Yeah. So now with 1 year since then, we have the results, and I think in terms of both the outcome and in terms of the markets, we can take the next. we can see that, you know, not many of us would have guessed that you see the blue circle, that the indices since that past over the past 12 months, since we had our last meeting, that's the returns. And they're actually, we can go back one step. We're actually in 2020, the net there was 7.4%, as you can see, but at the time of our meeting, I think it was a fair amount lower. So the returns over the past year is actually a fair amount higher than that. And of course, it's worth mentioning here our 2020 results. We had a phenomenal year, of course, very happy about that. And you can also see our Q1 results. There you can see that they were 11.5% in our increase in our book value in the first quarter. And that's also our annual average goal. So we're already there in one single quarter this year. And so if we were flat for the rest of the year, that would be, we would still meet our goal. So, and furthermore, since our start now, we have had a net annual increase in our book value per share of more than 30%. These two orange circles, they're not normal numbers to expect over the coming years and decades, but we have them now. So I thought it'd be interesting to look at the factors that I believe has enabled us to achieve them. So I've spoken to quite a few of these before numerous times. I think the number one goal, our don't lose money mindset, makes it, you know, if you manage to avoid losses, the only other thing you can get in investing is positive returns. So it's a good starting point. There is also our concentrated portfolio. We're long-term, we're keeping things as simple as we can. We're global, and we have this permanent capital structure. And I think also, of course, our great shareholder base, a very long-term one. And last but not least, I think we're focusing on the micro. And I think the last year, if anything, showed how important that is. So you'll notice here that all of these items are designed from day one, basically, to reduce complexity and reduce stress. So they're really designed to encourage calm behavior. Yeah. And out of these, I'll zoom in a little bit on one of these factors. I think maybe the one which would be prone to criticism and a little bit controversial, and I think some would even consider it a little bit stressful. I hope to convince you today that I view it as, in fact, much less risky than having, say, 30 or 50 investments, and also much less stressful than having 30 or 50 investments. So, yeah. So why are we even doing it in the first place, having a portfolio of less than 10 investments? We have our goal, which is 15% investment return per year. And as you remember, the indices usually, on average, over the past 100 years, have returned about 8 to 10%. Maybe a little bit higher even in Sweden and in the US, I think. And of course, 70 to 90% of all active investment firms, they underperform the indices. So clearly, if your goal is to be above the indices, that's above average results by definition. And that, again, by definition, require us to be different, or otherwise there's no way we could achieve it. Of course, being different, there's no guarantee we'll have above average results. They might as well be below average. But by being different, it gives us a fighting chance. And yeah, just before we go to that, in no way is there anything wrong by aiming for average results. There is the indices is a perfectly fine way to invest over time, and it will make you very wealthy over time to do that. But it does not square with what we're doing at River Oak. And of course, since most of you have invested, you wouldn't have done that unless you were aiming for above average results. So yeah, so for the sake of this little presentation, is actually 8 or 10 or 12 holdings, is that actually riskier than a portfolio with 50 holdings? So yeah, we'll do a little exercise for this. And imagine that you have to pick a team, which you can't change for the next 5 years. You'll be associated with this team, and you'll be responsible for this team and how the outcome of the team is generally in life. And if your goal is to minimize risk for the outcome of this team, let's look at what would you decide your picks. So you'd probably want to trust each person 100%. You'd want to have high respect for them. You want to be sure that, you know, they behave well towards other people. You don't want to be running around and you know, looking over their shoulder to make sure. And you want to believe strongly in their future. So who would be on this team? For most people, hopefully, a starting point would be your wife or your husband. Otherwise, you probably wouldn't have married them. It might be your mom or dad, your brother or sister, or kids if you have those. And you'd probably also fill it out with your 5 best friends or colleagues. Because you know these people and you know what their passions are, you know their strengths, their weaknesses, and you trust them and respect them, or else they wouldn't be there. They wouldn't be your best friends. Now, how about your best friend number 28? Assuming you even know who that person is, you'll probably be thinking, if you're thinking about it right now, you'll probably be thinking, you know, who is that even? Have to think a little bit about that. And yeah, what's her husband's name again? And, you know, what did he actually work with? Or did they divorce? Or does she even have a husband anymore? And do they still live in Stockholm, or, you know, did they actually move abroad? So yeah, you'd probably conclude, you know, that in a team, if you were to pick one like this, your family and your best friends, you know, they're on your team for very good reasons. And there is a reason why they are called best friends. And it's a matter of fact of life that most of us simply don't have the time or energy to have 30 or 50 best friends. We could have 50 or 100 friends, sure, but we don't have the time to follow more than more than a few friends very closely. And so if you're minimizing risk in this exercise, there's no way you can trust your number 28 friend as much as you trust your wife or your best friend. So it would only make sense to go with number 28 if you're actually so unsure about your family and your best friends and your brother or sister that you felt the need that you want to hedge your bet on them. That's when it would make sense if you're minimizing risk, which is what we're doing here. So, and I hope most of you don't feel unsure about your family or best friends in that way. So this is very much how I think about River Oak's investments, and River Oak will keep being different in this regard than in others. And I guess in case of any of you had any doubt. Thanks. And we'll go over now to Tilman for some questions.
Great. So if you have any questions, feel free to type them in the chat. You'll find it down below. So Daniel, I have one question for you. What is currently your single biggest challenge?
Probably my time to use it in a good way. Considering that it's gone pretty fast from where we started 4 years ago, both in terms of the number of our investors and the size of the operation and the new possibilities that size gives you. It's really, it becomes more and more important to really set that up in a good way, and don't get bogged down in small questions and small issues which doesn't really move the needle for us as a company. So I think we're making good progress on that front, but yeah, I think that's the biggest challenge.
So how do you want to go about using your time better then?
I think it's simple, straightforward things, which when you're starting out something, you're kind of running around doing a lot of things, or most things, even the small details. And I think that's really, it has to change. And I think it changes gradually for any company that starts out and grows. So nothing specific I'd point to, just be smarter about those things, which I don't need to do. So that's already changed, I think, in the past year, but there's still some work to do there.
So to our audience, the invite, if you have questions, please type them in the chat. You find it below. Maybe let's also look at COVID. How did COVID change River Oak and your work there?
So I think normally a macro event like this, or not like this, but a macro event of a large magnitude or of any kind, really, it would just go right by. It wouldn't change a thing almost. Because while it would be very useful to know the outcome of these regular crises we have in the world, you have a trade war between the US and China, you'll have problems in Russia, usually you'll have worries about inflation, about deflation, about interest rates, about unemployment in different countries, and so on. While it would be very useful to know them or study them deeply even, there is simply, again, going back to, there is only so much time, so you have to prioritize, and we focus on what is the most useful, what I view as the most useful, and all these macro issues are not one of them. In terms of COVID, it was a bit different, because you actually had a situation where most of the Western world weren't really aware of what was happening and sort of the risks about COVID, especially I think in late February and early March. I think it was still, most Western countries were going about their lives just like normal, like if like as if it was a flu. And you could understand why many saw it like that, and you had to spend some time some real serious time to actually get to a different view. So in this case, it did change. I wrote about this in my annual letter, that we actually sold out of 2 investments, which COVID sped up. They were on their way out, perhaps, even in 2019. But COVID certainly sped it up, because I was pretty worried about how those 2 companies, it was Fiat and Fiat Chrysler and Adevinta, which I mentioned in the letter, how they would cope with COVID, how those countries, especially in Adevinta's case, it was Italy, Spain and France. So that was a change. And basically what we did with the proceeds there was I invested them in 2 other companies, which also mentioned in the letter, Sinch and Netflix. And the outcome of those investments so far have been very good. But the reason why I made the investment wasn't because I saw a huge upside, but rather because I knew as little about how COVID would turn out as anyone else. So I was really risk minimizing when I did that. And I think it was, and that's how I always think about things. So to some extent, in that March period, it did change a little bit about our regular operations. But besides that, I can't really say that anything has changed. Try to focus on what's useful and knowable. So usually, 1 company at a time, going bottoms up rather than trying to make some sophisticated predictions about vaccination rates and our not, I believe it's called, the transmission number. Yeah.
So we have some questions from the audience, and with the look on time, you might try to answer them quickly. We have a question from Paolo coming from Italy. Where do you see the maximum assets under management level River Oak could afford if you want to keep flexibility to invest in smaller companies?
Yeah, I lost the word in the beginning. You said...
How do you see the maximum asset under management level?
So I think, when I say small companies, they're still pretty big. We're going to have Juha from QT Group a little bit later today, and that's a company worth 25 billion kroner today. So they're still pretty large, and I'd say from the bit above, we're currently at a bit above 100 million, and I see absolutely no limitations in doing it, investing in the same companies as today. Probably all the way up to 1-2 billion, probably, where we might have to adapt a little bit on the way. But for now, it's I have a lot more ideas than available capital. That's for sure.
And Marcus raised the questions if there are any plans or there's a curiosity to look at new geographies like Africa, for instance.
I'm naturally very curious about anything and everything. So I've studied it some, but I think I used to say before we went into Brazil and China, I used to say that with Sweden and the US, or the Nordics and the US, really, you have investments for about 5 lifetimes. So I do see a lot of opportunities, and especially China, but it's difficult. And I think it has taken me quite a few years to get there, to be able to have some comfort about China and Brazil as well. I think that India and Africa will probably come along the way, but not for now.
Daniel asked, on the team of the shareholders that is backing you, you currently have 50 plus shareholders. How do you look at growing the number of shareholders?
So it's a little bit of time optimization and future problems minimization problem. So to put that in better words, if most of our new shareholders come through current shareholders or someone I know well, and I think as long as we have, as long as I've said this to many shareholders that have asked, as long as you trust this person 100%, as long as it is someone that you would trust and you see them as a good person, and in some cases we've had, I think, additions which provide help in terms of experiences from their work life. We have quite a few CEOs and entrepreneurs which build up businesses, and of course this is exactly what we're looking at River Oak, investing in them and also funding the small ones when those come. So it's there is some legal limitation, I think, to when we raise capital, we can't send it out to more than 200 people. So that's some limitation, but as we grow, we might change our structure a bit so we could also do that. So the answer is happy to add them as long as I see benefit and no additional headaches, I think.
We are already a bit over time, so you have to answer this two last questions short.
You're welcome.
Do you have a take on crypto? Is one question by Daniel, and another Daniel Beckreen, is asking, where do you see River Oak in 5 years? It's hard to answer that shortly, but
the first one to answer that short is no. I don't have much intelligent to add, and it would be probably a longer discussion. In terms of River Oak in 5 years, I think if you think about where we were 4 years ago, if I would have predicted where we would be in 5 years, I would have been completely wrong. So I think I'll refrain from giving any detailed views there. It's just I just hope we're gonna be, a fair amount bigger with good results to have gotten there, and happy shareholders along the way. And if we have funded some entrepreneurs along the way, I'd hope they'd be very happy and satisfied with our association as well.